More worried about the public sector debt or the buildup in the corporate and private sector?
I'm worried about the buildup of debt across the board, right? So my fortune piece basically said, look, the economy looks good now, but it's all been paid for.
Does it? But you just said it didn't.
Sure. No.
The 62%, you 6.
No. Right. Yeah, unemployment, inflation. I'm not worried about inflation.
Well, then let's keep priming the pump until we get full employment.
I don't think we're going to get full employment. That's the big problem. And that's driving demand. In a world of abundant everything, we don't have enough demand because we don't have enough employment and enough wealth distribution to consumers. There's only so much stuff that the super wealthy who are in the stock market can be interested and will be interested in buying. And my focus in this op-ed piece, which Becky raised, and I'm grateful to have the opportunity, is basically to say, look, we've solved the problems of debt, household debt from the mortgage crisis 10 years ago by essentially transferring that debt to other places in the economy, most importantly, the federal balance sheet, where debt to GDP has gone from 62% to 100% in the last 8 years.
What becomes the inflection point in your mind where this turns into the crisis?
Okay.
And maybe this is part of it, is there a moment at which the Chinese or whomever you think are supposed to be buying this debt decide no mas?
I think that's already starting to happen. In other words, it's all about supply and demand. So we all talk about, is the Fed going to raise rates or not raise rates? It doesn't really matter what the Fed does. What matters is what's the price of our debt for people who want to buy it. And while the ECB is raising rates, and while China is buying oil from our 13th largest holder, Saudi Arabia, in yuan, Saudi Arabia has less reason to buy our treasuries. The demand for our treasuries, the Fed isn't buying. It had $4.5 trillion. Foreign buyers own $6.2 trillion. China and Japan are the largest foreign buyers. They're both more focused on buying their own debt to support their own economy. We just talked about Saudi Arabia before. Then you've got U.S. banks that own another $6+ trillion. Who knows what they're going to do, because they're going to have other alternatives as well. So it's all a question of, well, where are the alternatives going to be priced in the credit markets? And I see demand for treasuries starting to dry up, and what could become the trigger, I'm not suggesting that it will, but it's theoretically possible, is if cryptocurrency adoption in the real world to settle real transactions starts to gain some traction.
Are you a believer in that?
I'm a believer in virtual settlements.
There you go, man. That is some crazy news, and I actually agree with him. I think that more and more people are going to be tired of buying government debt, and what's going to happen is that all these people with their trillions and trillions of dollars of assets that have been buying government debt, they're going to move into cryptocurrency. So it is really interesting to see a guy on CNBC. This is not even supposed to be a cryptocurrency coverage. This is just supposed to be covering the stock market and, you know, Trump's trade war. And that's another reason too for this channel. Like I said, I'm not going to just only cover cryptocurrency. I think that, you know, if you're an investor, all markets are tied in together. That's why I'm going to cover real estate, stocks, bonds, the economy. And I think this guy right here and his name is Dan Arbess, is speaking the truth, that a lot of these debt buyers who've been buying government debt, especially U.S. government debt, they're going to stop. It's eventually going to stop. And where's that money going to pour into? Cryptocurrencies. So I know that a 400 billion, it's almost 500 billion market cap still seems maybe overvalued, and, you know, a lot of speculation, but I'm waiting for the floodgates to open, and let me know what you guys think. But I think that there is a great possibility that government debt becomes less attractive and cryptocurrencies becomes more attractive. And when that does, whoever's been watching the show and whoever has been investing in cryptocurrency, and obviously the right cryptocurrencies, you got to be careful. But the people that have done the research and the due diligence and understand the market, they're going to do very, very well. It's basically like discovering oil in the 1800s, oil was kind of worthless for a long time until we had the technology to use oils for railroads, boats, planes, cars. So we'll see what happens. And let me know what you guys think. And if you do have a chance, please subscribe to the channel. And I'll talk to you guys soon.